more, let's bring in A.B. Mendez, a senior research analyst at GreenCrest Capital. Has been covering Groupon since January. He joins us now from New York. So, A.B., what are you hearing from investors about this roadshow, what they're expecting, and what kind of questions they're going to be asking?
A lot of different issues on investors' minds. Some of the foremost would be some of the issues you've seen recently around stability in management, other key roles within the company. So you had some turnover in the COO spot, as well as in the marketing director role. So I think it'll be key how CEO Mr. Mason, as well as some of the key executives that have been brought in from previous roles at Amazon, address investors' concerns and just interest in how the company will become more consistent in its communications with investors and with the street. Another key question is, we saw some interesting things in the recent third quarter update of the S1. So you see the company approaching profitability on a GAAP basis more quickly than many had anticipated by pulling back on some of the marketing spend. At the same time, the take rate, Groupon's net revenue as a percentage of top line gross sales, including both the merchants and Groupon's that take rate decreased by about 1.5 to 1.8 percentage points. The question would be, is this due to increased competition from Google and others, or is it more just the rapid growth of Groupon's international business, which is still in an earlier stage of the overall development than the North American business?
Now, Groupon is approaching profitability by decreasing its marketing spend, but by decreasing its marketing spend, can Groupon continue to be a good, viable, long-term business, A.B.?
My personal opinion is yes. What the company has presented by way of illustrating the trends they see in some of the deeper details of the business. One example is they take the second quarter of 2010 cohort of subscribers. So all the subscribers that came in as new subscribers in that quarter and showed how they performed over the following 9 quarters or so. And they basically illustrated that after 2.5 to 3 quarters, those cohorts, those subscribers become cash flow positive or accretive to operating income. And the company basically says, this is representative of all of our cohorts, of the broader trends we see in our business. So investors will want to see a little bit more demonstration of that. So how have the later cohorts performed? Basically, the company has provided ample illustration that they're generating real value for both consumers and for the merchant partners. But I think investors will want to see a little bit more detail around both churn. So what's the rate of attrition? How many subscribers go out the door or unsubscribe each quarter? So the net subscriber adds, not just the gross, as well as the more illustration of the different cohorts subsequent to 2Q 2010.
A.B., as you know, there have been a lot of skeptics out there loudly criticizing Groupon's IPO. I want to read you a quote from Rocky Agrawal, a consultant who says, "It's a terrible time to bring a new offering to market, but Groupon may have no choice. Based on the numbers we've seen from the company to date, it's burning through cash and may have to go public in order to keep the lights on." Does Groupon have to go public? At this point, could they raise hundreds of millions of dollars of venture capital right now to keep going, or do they need to raise this capital on the public markets?
So the short answer is no, they don't have to go public to continue growing as a viable standalone business. A couple of reasons why they should, why it makes sense at this point, and I can also give you some thoughts on the IPO and what we expect in terms of the size and performance of that IPO if you'd like to discuss that. I think of it in terms of I have a dream scenario and a nightmare scenario for Groupon, which we can go into, but the short answer is the company's already cash flow positive. They've been cash flow positive for each of the past 4 quarters. Currently have close to $250 million of cash on the balance sheet, assuming they float the relatively small percentage that they're looking to sell in the IPO, about 5% of their shares. That brings them closer to $800 million in cash. So already have $250 million, currently generating positive cash flows and looking to add substantially to that through the IPO. They don't have to, but that adds to the war chest. Groupon is facing heavy competition from large, powerful companies, the likes of Google and Amazon, which has its own daily deal offering, which is done in a partnership with Groupon competitor Living Social. Both Groupon and Living Social have rolled out their mobile location-aware platforms in the last several months and are continuing to roll those out nationwide. So Groupon has a number of reasons why they can use the capital and will be better able to compete with large companies like Google and Amazon, but they don't have to have it. It's just it's the right time for them to raise capital. And the fact that they're doing a relatively modest size raise, to me, speaks well for the fact that the company, doesn't have to have loads of cash. It's a good time for them to bring in some additional cash equity.
So, AB, of course I want to know what the nightmare scenario is. I mean, what would that look like?
So some of the questions that investors have had, apart from details of the financial performance, is just management's ability to be consistent, positive, and proactive in its communications with investors and with the media. So the memo that leaked a couple of months ago that had some information that was questionable with respect to how that related to what had already been published in the S1. They've hashed out those issues, and so everything seems fine on that front. But that, along with the turnover at the COO spot, kind of contribute to this question of what is the management culture internal to Groupon. It's great as a private company, but how will they translate, convert that into success as a public company? And so that's what the roadshow is all about. Every indication that we have is that it's a very sharp management team. They need to be a little bit more measured and circumspect into how they augment that team over time, how they select the right candidates. But yeah, so just sorry, go ahead.
We'll see how well Groupon convinces those skeptics out there on the road. Thanks, AB Mendez.
Thank you.
Of GreenCrest Capital, for joining us here on Bloomberg West. Now.